Hi, hello, and welcome. Hope you are good, doing well. So I hope that you can hear my voice. Voice is okay. Just let me know that if sound is fine. Thank you. Yes, long time. So let's move on for this week, guys. Thank you for coming, those who are in. So, first of all, we're gonna start from the dollar index. All right. So if you remember that we were talking about last week that dollar has to. I mean, you are looking for another leg higher and short from the top. So before going to look at that, we're going to look at the calendar. So we are having a CPI data due this week on the pound and on the dollar as well. So today we're going to have our core PPI data is due today at 1:30 p.m. my time. So 1:30 p.m. core PPI data is due. So this is also important. So tomorrow we're gonna have a CPI data due on pound. Higher CPI numbers on pound gonna be good for the pound. All right, but right now, as I said last week that there was a risk for the pound to crash. So we had a crash last week. Not the crash we have seen previously, but still a good drop. We have seen almost 400 to 500 pip move we have seen last week, and close to 120. All right, right now it's being traded at 1.2180. So the number going to be important for the core CPI on dollar, or core CPI or CPI yearly basis. All right, so right now the expectation is that 2.9%. all right, last month we had 2.7%. so any drop in the CPI below 2.7, or let's say close to 2, highly likely the target, the number is going to be close to 2.9%. all right, because inflation right now is sticky and the rates are coming down, so there is a risk for the small push up on inflation. So any drop on the CPI numbers on tomorrow, Wednesday, let's say below 2.54, right, or close to 2%, going to be a surprise for the dollar, and we may see big drop on the dollar. Even we are expecting dollar to drop, when Trump going to be in the office after 20 January. So right now, the reason dollar is stronger because Fed said that they're gonna wait and see kind of. They are in a wait and see kind of scenario at the moment. How Donald Trump gonna do? So dollar is up just based on the expectations that Trump gonna have tariffs, and those tariffs gonna be inflationary. We're gonna have inflation rates gonna stay longer, higher for longer, and just buying based on that. Dollar is up just based on that. So once Trump gonna be in the office, and how he gonna react to tariffs gonna drive the dollar. So dollar is just being bought based on speculations, alright, so speculative move. So we may see significant change into that trend, right after when we're gonna have Trump in the office. So any drop on the inflation 2.54 gonna be a surprise for the market, and we may see a big drop on the dollar. All right, so right now we can see that the trend is to the downside in inflation. All right, so the inflation is going down, and any significant drop close to 2% going to be a surprise for the dollar. Okay, so that's what this is the important number for the week you are watching, and core retail sale as well. So any drop, if both reports are going to drop, CPI and core retail sales going to be a big driver for the dollar. So last week NFP numbers were up, and which caused the dollar to gain. All right, but as we can see that the trend was already strong, so the good job numbers did not sustain the trend for much longer. So we have seen that the some pairs, they have reversed the NFP numbers. So yeah, CPI numbers you're watching very carefully for this week. So let me open a chart. Okay, so I was looking at this chart. So this is where this is what we can see on this chart, right? So inflation is heading towards 2%. This is 2% target, so inflation is heading towards 2%, and have shown that chart before as well. So inflation went higher, and then yields went higher. Then inflation dropped, and yields are setting up for a drop. So 10-year yield is at close to 5%. All right. So any dump on the inflation report for this week, yeah, so gonna drive the yields lower aggressively. So bonds are a buy for longer term. Perfect, place to buy the bonds. So this is the chart for chart you're watching. So once you understand that the yield chart, right, so the 10-year yield chart is there. So last week we were expecting it to retrace from this area. So yeah, if it goes to 5%, it shouldn't be a surprise, okay? But we can see that inflation is trending lower, right? So more likely we can see that the yields gonna start trending lower. So the only reason why yields are up is just based on the expectations that they're going to be, tariffs. When Trump going to be in the office, they're going to be, higher tariffs, and those tariffs going to drive the inflation higher, causing the bond sell-off. All right. So right after the Trump going to be in the office, things going to change very, very quickly, and we may see a sharp buying over there on the bonds. All right. So and drop on the yield. So yeah. So keeping that thing into mind, all right. So you're looking dollar to go into the downside as well, all right. So dollar to drop. So last week we talked about that. I don't think so. I need to talk on the bigger time frame again. So we can see that the let me draw a couple of arrows on this. We can see that the new high is over there, and after having that new high, it is retracing. The trend is price is falling, all right, and you are looking at counter trend trade, all right. So looking for dollar to fall from that top. I just need to draw a couple of trend lines there, right? New high again, or break the trend, right? So if I'm going to pull out the moving averages, we can see that the price is still holding the trend, okay. So last week we were expecting it to stay within the ranges at this area, all right, our new high. So we went higher, okay, and complete new leg is just appearing over there. So again, a simple analysis for this week. So counter trend trade is already happening over there. We were expecting that to happen. So dollar to drop, okay, that move is already happening over there. So dollar is just falling against some of the currencies. So this to continue to keep falling, okay, break through the moving averages, all right, and as usual we look for correction and continue, all right, or hold the trend for another leg higher, and then again from the top to be counter, all right. So some of the pairs have just reversed. So if I'm going to look at the couple of pairs, as we were expecting all right, so we were expecting this to drop, all right. So we got a nice move over there, and this is dropping. So we were expecting, all right, so we got a drop on the pound last week, which caused that the dollar is set to fall, and we were expecting these currencies to bounce off from the lows after having the drop over there, right? So last week, so we Australian dollar is bouncing off, New Zealand dollar is bouncing off, dollar CAD is dropping from the top, which is a good sign that we are having moves, all right. So copper also went higher nicely from the lows, and the chart which I'm looking right now is the dollar CAD. Okay, so I'm gonna look at the dollar CAD chart. Okay, so hopefully you remember the last week analysis. Yeah, so last week analysis was this. All right, so we were expecting dollar to follow to do in a similar manner the way it has done after 2016 win. I mean, of Donald Trump. So similar. I'm looking for dollar CAD chart. So some little drop on the dollar CAD is a sign that the dollar, little drop on the dollar CAD, and so dollar CAD is also going down. So dollar CAD, yeah, so dollar CAD is down from that top. I need to move those moving averages. So a little, you know, drop over there. So little drop over there. So small push up over there on the euro and pound. Okay, so decent rise we got on the New Zealand dollar, or as compared to the Australian dollar. But yes, they bounced off from the lows. Okay, so decent bounced off came over there on the New Zealand dollar. So again, similar, you know, strategy. The strategy which I spoke last week. The strategy when you are having a high within that trend. Okay, looking to counter it, and when price is into the trend. All right. So if it doesn't break and does not reverse, then you are looking it to continue with the trend. Simple. All right. As we can see that the moving averages. Yeah, and I don't think so. So basically you're looking to trade within these ranges right now. The ranges price has just found, right? So from top to hold, okay, and continue. So if I'm gonna look at the lower time frame, all right, and a little correction is just simply appearing over there. Yeah, so and let's go and remove that. So this correction which is just simply appearing over there, yeah, that correction to break down and continue. Alright, this correction to break down and continue, and this is what you're looking right now to continue. So we are having indication right now, okay, the chart which I last week we don't have, but right now we are having nice indication that we are going to see this trend, the trend which is just trying to appear over there from the lows to continue. Okay, what we got pound dropped aggressively on the Australian dollar, pound dropped against the New Zealand dollar aggressively from the top. Alright, there we can see that the pound drop aggressively. Yeah, so last week I was talking about that the pound is lagger and we may see crash. So we got a little crash over there, and we got a drop on the euro as well. Okay, we got a drop on these currencies as well, but the drop was limited over there on the Australian dollar. Limited drop. All right, why drop was limited over there? Because these currencies, the Australian dollar and New Zealand dollar and other risk-on currencies, they were gaining behind the scene, all right, which was causing, you know, move here, all right, the move. So Australian dollar is gaining against the pound, Australian dollar is gaining and New Zealand dollar gaining against the pound, all right, and that's the reason we were having an opportunity over there to have a sell opportunity on these. The euro was slightly behind the pound, all right, so we were having sell opportunity over there on the euro, New Zealand dollar, sell opportunity on the Australian dollar. Okay, so both are doing really well right now, and we are having push up over there. So sell was there, okay, sell opportunity was there, sell was there, and buy opportunity was there from counter move. Okay, so buy opportunity was there, and at the same time sell opportunity was there on the dollar CAD. You see that? So we are having decent drop over there, okay, so which is heading towards 24 November. It means that the move is really ahead on these charts, very well ahead. Means that we still may see more upside, okay, more upside is possible if as I said that if CPI is going to surprise, okay, so we may see a sharp buying over there on the Australian dollar and New Zealand dollar, and dollar may go down. So little risk over there buying these charts, all right, the pound. But as we can see that the euro dollar is close to parity, close to 1, okay, so it's okay to start looking for euro to buy, all right. So euro to buy as compared to the pound. So once euro goes up, all right, euro start rising, then you can start looking for buy on the pound. So pound gonna be a lagger again for upside. So look for the euro to continue to keep pushing, then start looking for buy on the pound. All right. So went up, So copper also went up, was a sign that dollar is set to reverse from the lows. Okay, this is what you are looking, and we got a drop, okay, on this, and these are the chart setups which we had last week. We were expecting them to continue to keep dragging lower, so we got a nice move on both of them. All right, we got a nice move on both of them for our time frame. Okay, and we were expecting this to break last week, so nice move started over there. Still got a more to come, more downside to come. All right, so euro New Zealand dollar broke the bottom, more downside is expected on this. All right, if I'm gonna look at the pound New Zealand dollar, so pound New Zealand dollar gone well below. Right, so if I'm gonna look at the dates, then we got a cross line here, and the started move is there. Right? So we have reversed from these lows to highs. Okay, so I'm gonna go all the way to there with the fibs. Okay, we can see that we have dropped almost 70% here. More weaknesses on the pound, which I said last week. Yeah, the pound can drop more than the other. So more weaknesses on the pound, right? Less weaknesses on the euro, right? So this is telling us that these currencies are gaining. Risk currencies, New Zealand dollar and Australian dollar, risk currencies, they are gaining behind the scene. All right, so more downside is possible. So we are sitting at 70% retracement of the pound New Zealand dollar, right? But we are still way far away from the retracement of 70% of this previous move. Okay, means that the risk on assets is going to be a buy opportunity sooner or later once they're gonna find their floor, because the risk on currencies are gaining some strength. All right, so yeah, they are doing well, both. Okay, so both are doing well. So yeah, so we are having little move over there on the dollar index. Okay, this little move. Okay, this little move, but on other currencies we are having bigger moves, which are giving us a sign that you are looking to find a top over there on the dollar pairs. Okay, so same here, right? So we were expecting this to drop. We are at least it to go all the way to 41 in coming days. All right, so 41, yeah, 40 these areas, 40 of 39 these areas, the dollar CAD. Okay, if I'm gonna look at the lower time frame, similar, you know, structure or correction is just building over there. Still can test the top. All right, so we're expecting this to drop. Okay, and you're looking right now this correction which is just developing over there. All right. Alright, if one pair breaks that correction, one pair means that if one out of the other dollar pairs breaks that correction, alright, and the one which is not breaking, you are looking to that to continue. So if you're looking this to break down and continue, and paying attention at this top, yeah, if you see that any other pair is going to retrace all the way back to that top, alright, then wait for the price to test that top and looking for this to counter again from that top. Yeah, so like this. Hopefully that makes sense now. Okay, so same goes with the other pairs. Okay, we are close to parity, new low, looking to counter. All right, and the counter move within these ranges. All right, so from 1.017 to go all the way up to 1.045. So little push up came over there. Yeah, so we got move. And you're looking at to counter and go all the way back to that top. So if I'm going to look at the lower time frame, all right, so small push up, and again a correction is just developing over there. All right, looking for this correction to hold that place and break out and continue to keep pushing more upside. So let me pull out the lower time frame and look at this. All right, so the correction which is just 15-minute is just developing over there, so to hold that right now and continue to keep pushing for upside. Alright, so if one pair is break out, then you're looking others to continue to follow, so catch up. And if one doesn't go, alright, if they retrace all the way back to the lows, alright, which I'm not anticipating at the moment, I'm anticipating this trend which is just, you know, setting up, just continue to build up to gain for more upside. So that's what you're looking on the euro. All right, and if I'm gonna look at the pound, pound is slightly risky to go for long at the moment. Okay, but as I said that 120 was a realistic move on the pound last week. Okay, so yeah, so there is a CPI number due, CPI data due tomorrow. Let me close this on the pound. Okay, if numbers are going to be higher on the pound, we may see move over there on the pound, but may not see a big move over there. All right, so there is a risk for the pound to stay bearish. All right, stay bearish. So if you are looking for buyers, I said that last week, if you're buyers, you have to keep in your mind that there is a risk for the pound to crash. So any strong numbers on pound, CPI numbers, all right, so can give us a little move for upside, not a big, big aggressive move for upside. So there is a risk for the pound. So for buy, yeah. So yes, you have to be really careful when you're buying. Okay, but once you see that the others are gaining and pound is lagging, pound is not rising, then you can start looking for it to go back up. All right, but right now is little risky to go after that buying. Yeah, as we can see that the Australian dollar, US dollar, they found the floor. New Zealand dollar, they found the floor. Yeah, so now falling as aggressively as we can see that the pound is falling. So yeah, for buyers there is a risk. So yeah, once you see that the dollar is gaining, losing the steam against the others, then later on, after once they are leading clearly, then you can start building your position for upside on the pound. But right now, as said on the others, okay, this correction is just building over there. Okay, that to continue to keep rising for upside. Okay, this move to come. Okay, so just be careful when you're buying the pound in simple analysis. Yes, there you are looking for buying on the Australian dollar, specifically the New Zealand dollar, and both currencies are at a good spot. We are at the lows back in October lows 2022, and some of them calling that Australian dollar can fall all the way up to March 2020 lows. There is definitely a risk for that much drop. The simple reason is that the Chinese, how they are dealing with the disinflation. All right, if something bigger easing is coming from the Chinese, all right, that can cause the Chinese yuan to fall. Right now they said that they are watching that level. As I said that last week, they won't let this to break through that 7.37, 36 or 37. They are watching it to hold that. And on the other hand, we are having some comments from the Bank of Japan. They are also saying that they are watching these speculative moves on the dollar against the yen. So any intervention from the Bank of Japan or from People Bank of China going to cause dollar to drop against the yen or yuan, all right, will be a sign for the Australian dollar to stay intact for upside and New Zealand dollar to just keep pushing for upside. So these two banks are important, even more important than the Australian central bank, all right, because they are facing the Chinese facing the disinflation, and Japanese are also facing the disinflation. So aggressive easing from the Chinese can cause the yuan to spike up, all right, and that gonna have the impact on the Australian dollar and New Zealand dollar as well. So far we can see that they are holding the top. Dollar yen is holding the top. 150.58 is being held by the dollar yen, and we clearly can see that the other yen pairs they have fallen. All right, the yen has already gained over there. So this is also telling us that the yields are about to fall in coming days. All right, the US yields or the other yields which gone higher, so they are set to fall aggressively. All right, dollar yen also need to go down. Chief yen went lower, right? So euro yen went lower, pound aggressively went lower, dollar yen is still holding that top, means that dollar is set to fall in coming days. All right, down, all right. So All right, so any move from those banks going to drive the dollar lower, okay, and these to go higher. Just 1 second. Okay, so some banks, they are also don't want their currencies to get more weaker from the current levels, and you are also looking for prices to go into that direction where they want their currencies where they want. Okay, so this is what you are looking. So if I'm going to go to the similar stuff like other DXY or other dollar pairs, all right, this place to hold 15 minute, hold that place. All right, so hold that trend and continue to keep pushing more upside. Okay, so as we can see that some strength is coming. All right, so pound New Zealand dollar is much weaker. If I'm going to use the pound Australian dollar to just let you know that up to what level we may see the move. Okay, we just need to invert that scale and need to find the dates over there, right? All right, so let's say this. So up to this, all right, so the move to go all the way up to Friday 29th of November, all right, so yeah, this, yeah, up to the push up and go all the way up to 65.50 in coming days. Okay, so lower time frame, you're looking, as I said, that looking counter trend, and once prices are in the trend, how the rest of the market is doing. If the rest of the market is still trending, okay, one more leg lower, and if breakout is coming, yeah, for upside, then this whole trend breakout, the whole bearish trend breakout for upside, then you're looking it to go higher. Okay, New Zealand dollar is also similar. So we are at yeah, so we are at 20 October 2022 lows, and looking for this to reverse, to go back up. Okay, we are back into the trend. This chart has already moved from the lows, so the counter trend move, we can say that has almost gone. All right, so the counter trend move from these lows have gone already. Okay, so this was the NFP data driven that move lower and bounced back very aggressively. So you shouldn't look for, it is still a buy, right? Still a buy for upside. Okay, but the current price is far away at the moment. Okay, the target is this, this place in 29 November highs. All right, and 59.50. So go up to that much high in a counter trend move. So same analysis on lower time frame. If I'm going to pull out the moving averages and I'm going to pull some trend lines, okay, hold that 15 minute lows and stay bullish for upside. All right, and see if CPI drops, then you are looking at to continue to keep pushing more higher. All right, so this place to hold and stay trending for upside. All right, and gold. Okay, so we got a strength on the gold last week, but the strength wasn't so aggressive or strong. All right, so we got even strength on the gold after the non-farm payroll number. The gold reversed the losses and aggressively went higher. So yes, we are simply looking at to just keep climbing up slowly the way it is doing right now and claim the all-time high. Again, CPI numbers drop, then you are looking at to pop up and continue to keep pushing more higher. So if I'm going to look at the lower time frame, all right, so the trend is right now is this 1 hour time frame. All right, these lows to hold and these lows to hold and continue to keep climbing. So looking for into this move at the moment. Okay, this push up, back clean back to 27. Silver. Okay, so silver is very much similar like last week. All right, so silver to go back up. Okay, silver hasn't shown the move yet, so the copper has shown the move. Some metals, they have shown the move aggressively, so silver to break through that top. Very much similar kind of move to appear over there, right? Like this move, right? This move, at least up to this top or all the way back to that high. Okay, so silver to hold that first, bounce back for this much, right? This much, and in the best case scenario, continue to keep rising all the way to the upside. So that's the silver. Copper, you know, if we don't get a move on the gold, right? If we don't see that the gold is pushing higher, as I said that, or silver push up for upside, okay, then the copper not gonna continue, right? The copper not gonna continue, and aggressively can crash back to the lows. All right, aggressively gonna crash back to the lows like this. So not gonna continue for more upside. So there is no buy opportunity on the copper, all right. But if, as I said, that if you see that the gold started to struggle or silver started to struggle and going to the lows, okay, then copper gonna be the lagger and gonna fall very, very aggressively to the downside, back to the others. Okay, same analysis like others. Okay, so dollar chief to fall from these highs. So yes, the Swiss they are facing the disinflation. Yeah, inflation is falling, rates coming down, more pressure on the chief at the moment specifically against the dollar, as the Fed is holding the rate, you know, right? So causing this to just keep pushing up, right? But once we're going to see that the dollar is falling against the others, we're going to see drop on this chart too. So far short term bullish, all right, but again from top looking to counter it and go down from that top, go down within this area. All right, so pound CAD dropped very, very aggressively last week, and yeah, it can drop more. All right, so don't know up to which level it can go, all right, but still bearish, can continue to keep falling. All right, so the catch-up move we may see on the other pairs. All right, the only pair which left behind is the dollar CAD. Dollar CAD needs to catch up. All right, and very much neutral on this chart for this week. All right, so yeah, gone. The move is gone. So the move is also gone last week. We're expecting this correction to break and continue to keep dragging lower. All right, so any correction which appears over there, you're looking at to continue, and this to take out that low as well, like we have seen that the 22, the 26. All right, so the low has been taken out, the 22 November 2014 low on pound CAD. So a pound to take out that low as well. So 2027 or 2022, we can slightly move back within these dates. So take out these lows as well. Continue. Same. Continue to keep dragging lower. All right, and 22 November lows to take out. All right, so any correction similar like that, I'm looking for that to continue. Okay, so keep dragging lower, break, and continue to keep dragging lower. So euro against the Australian dollar. Okay, go back up, test that, and then you're looking at to keep dragging lower. So same analysis like the others. Take that low 2022, right? So you're looking at to go back to that top, and if test that, then you're looking at to short. All right, so still dropping, but a little slow. All right, little slow. So you're looking at to hold that top again, and okay, so this is what you're looking. If I'm going to pull out simply pound Australian dollar, pound New Zealand dollar. We are having a decent drop over there on the pound against the New Zealand dollar. So which is a sign that if we're not going to get that move all the way back to that low, okay, at least you're targeting this previous low, right? So 200 pip move at this area, regardless of your stop loss, where you are putting your stop loss. So you're watching it. If it doesn't, drop, okay, it doesn't break out, and this correction doesn't break out and test that high. This testing that high means again, and the dollar is going back to the top again, right? Or Australian dollar, New Zealand dollar, they are testing the lows again. All right, so same goes with this chart, much lower as with compared to the Euro Australian dollar. All right, so nicely went lower. So we have the opportunities there, okay, but the analysis is same. All right. So the analysis is same. I'm gonna pull out a couple of more targets. Okay, so that's what you're looking. Right, so this correction broken out. The trend is just trying to appear over there. Right? So I'm gonna pull out the same chart. We are having more drop on euro against the. This is telling us that the New Zealand dollar is more stronger. New Zealand dollar is more stronger at the moment as with compared to the Australian dollar, right? New Zealand dollar is more stronger. So continues. If New Zealand dollar keep getting stronger continuously, right? Going to be a sign that the other Western currencies they're gonna rise as well. Okay, so previously when we were talking about this chart, we were expecting a sell opportunity, right, from these areas last year. And so now you're expecting it to behave in a similar manner, right? I mean, not a best buy opportunity, so I'm going to ignore these charts against the chief. These two, they have moved away, all right? But if you're still paying attention, all right, so I'm going to draw similar structure like I have done on the euro against the New Zealand dollar and Australian dollar, right? So like this. Again, not a best buy. These are not a best buy, these charts. So I'm going to ignore them. So same last week, okay, bounce back and reverse the trend or counter. Same like the Australian, New Zealand dollar, US dollar, right? Same like New Zealand dollar, US dollar. Right, so the trend line The moving averages is coming over there. The target is these places. Okay, same dates, 29 November. Okay, and on lower time frame the analysis is also same, the 15-minute. Alright, so keep rising or hold that previous low of those moving averages. Right, let me come draw that. Alright, yeah, continue, keep rising or hold this low. Okay, so same. Let's first look at the bigger time frame and find the structure. Okay, so same. Let's draw this slightly differently. Slightly in a like a wedge. Okay, again find the date, 29. Target where you're expecting it to go in longer term. Alright, so arrows on one more leg lower. Okay, I will remove that. Right, and I'm going to look at the 15-minute time frame, moving averages. Right, so the places you are looking to hold on what time frame, this current strength is this. Alright, same. Alright, okay, same like Australian dollar, US dollar. If we don't get hold of this low, okay, then new low and then again, or euro dollar. So basically we are looking for a risk on move. Okay, so the chart is showing right now we are looking for a risk on move across the market. We are having we had a risk of move since last couple of weeks on the risk on the equities and on risk on currency as well. So we are looking the risk on move to come back, and these are counter trades, the trades which I'm showing right now against the trend. I'm going to ignore that chart. So euro pound popped up from the lows. All right, there is a chance for this to spike at some point, right? Not now. I'm not anticipating it to just spike up right now. Okay, but yes, spike up is possible like this, right? Like that. So when we're gonna have a crash on equities, okay, then we can expect that crash to come. So why we do have that crash basically? Okay, let me explain the reason why we do get that crash. So the reason is very much simple. Okay, when we see that the pound fall slowly, okay, but euro fall aggressively, okay, you're in that situation, right? Drop on euro is telling us that the dollar is gaining. Okay, when dollar gains tells us that you know, there is a risk of move, right? So people are selling, investor, they are selling the equities, all right? Or if we don't see drop on the equities, but at the same time we see that the dollar keep gaining, is telling us that the investors, they are shifting away from risk on assets slowly and building their positions on I mean risk off assets, all right, or safe havens. So safe havens are rising slowly, right? But equities are not falling. The risk on assets, they are not falling. When that sudden move happens, when you know something, some uncertainty hit the market, we see aggressive drop on equities. All right, that aggressive drop. What the aggressive drop does, all right? The aggressive drop drops the equities, all right, and at the same time that uncertainty or aggressive drop, you know, put impact on the risk on currencies more than the euro, right? Like Australian dollar drop aggressively, New Zealand dollar, CAD, or pound and pound, right? They drop aggressively as with compared to the euro. So euro stop playing as a safe haven at that time, all right? All right. So which caused the aggressive strength on the euro against the pound, all right? Euro goes higher, against the pound, all right, and pound goes lower aggressively. So that caused that strength. Okay, so when there is a strength, when we see that the euro rising very aggressively, euro rising aggressively against the pound, this early strength is a sign that we are going to see top on the dollar, all right, or the dollar strength is about to end, or we can say that the euro is finding the floor. Euro is at the floor. When you see strength on the euro against the pound, okay, euro rising aggressively against the pound, means that the investors, those who are looking for safety, all right, they think that US is also not as safe at the moment, so let's move on to the Europe. They start putting their money into the Europe, right, which caused euro to gain more, all right. So when euro gain against the pound, means that investors coming back into the Europe looking for safety, they are more safe into the Europe as it compared to the US or other other risk on countries. That is a sign that we are going to see bottom on the euro dollar or top on the dollar is going to drop. That's an early sign. So we had a strength on the euro pound. This is not a crash at the moment, all right, but this early strength, okay, let me show you on a chart what I'm talking about. Okay, so this early strength was telling us that we are going to see floor over there on the euro. All right, this strength, all right, the strength came over there aggressively. We did not see aggressive drop over there on the euro. Right, little drop over there, a kind of 100 pip move came over there, and then again found a floor over there. There was a hand. Let me exactly show you the difference. Let's find that, the exact difference. Okay, I'm gonna draw from there to there, right, there to there. Let's see how much draw we have in terms of pips. All right, so 2.45%, we can see there that the 2.45% or 250 pip drop over there on the euro from the exact date, right, and almost 500 pip drops over there, so 3.81%, so which is a very big drop on the pound. Okay, this is causing the divergence on these between these two currencies. This is telling us that the investors shifting away from the pound, right? So they were expecting higher rates, higher for longer from the Bank of England, all right? Suddenly that narrative changed. They ran away from the pound, all right? They ran away from the euro first, then they ran away from the New Zealand dollar, Australian dollar, but they were holding on pounds, right? So once they realized that the Bank of England is looking to cut more this year, they crash the pound, right? So this is causing the euro to rise. Okay, when euro is rising against the pound, is also a sign that we are about to see floor over there. So more strength on the euro against the pound is also a sign that the floor is coming, floor is near, all right? And once you see that the euro keeps pushing higher, okay, then you start looking for this to go back up. Right? Okay, so what I'm saying in other words, okay, if euro keeps rising, then euro pound will push up. Euro pound push up means pound to stay bearish, pound to stay under pressure. All right, if this keeps pushing higher, you're not going to see strength on the pound. All right, you're going to see strength on the euro. Euro again going to keep rising against the dollar. The pound gonna stay bearish, but there's going to be limited drop on the pound for the downside, and that's going to be a sign that the pound also going to rise, going to start following the euro dollar. So that's how divergence happens, or we see the lag in the market. Okay, so drop on the pound chief also went lower aggressively last week. All right, so not a best chart at the moment. Alright, so yeah, so we may see push up back to that top, and this is the longer term chart. Right, not a best at the moment, so the move has already happened over there. So chief yen, okay, so the important thing is that the yield is rising. Okay, the yield is started to rise finally. This yield is rising. Yields are rising across the market, right? But rising yield is putting pressure on the Bank of Japan. So we are testing the April 11. So where is the April 11 on the currency? Way below. This is actually suggesting something big gonna hit the market. All right, something bigger gonna happen, and we're gonna see a big aggressive sell-off over there. So far, yield is pushing higher, and on the other hand, if we're gonna look at the inflation of the Switzerland. Okay, this is, let me pull out the inflation chart as well. So inflation chart. So inflation is still, up. We can see there the 2.9. So this area is still holding higher in the Japan. All right. So now if I'm gonna go and look at the Switzerland, all right, so they are in more deep water at the moment. Okay, so the inflation has fallen below even 1%, 2% was the target. Inflation is at 0.60. Inflation is at 0.60 right now. 0.60. If I'm going to pull out the rate, CHINTR. All right, so you only can expect that to continue to keep dropping. All right, so go into more deeper. Yeah, even negative territory. So they're saying that they're going to go into the negative territory. So this is suggesting that the yields are pushing higher in the Japan, all right, and inflation is holding. I mean, simply there is a divergence coming. Policy divergence is just coming. So keeping that thing in mind, top is in place, all right, and some comments came over there early morning from the Bank of Japan, that from the Ministry of Finance, that they are looking for these speculative moves to reverse, all right. And you're looking at it to just continue to keep dragging lower. First, you're looking at it to, this place, all right, this current 4-hour correction to hold. And if it doesn't hold, then go back up and test the top. Then this longer term top, which is just building over there to drag lower. So if I'm gonna go and look at the lower time frame, okay, so some strength, we can say that's slightly risky. If one yen pair breaks, then you're expecting the others to follow up. Alright, so this to break down and continue to keep falling. So my analysis is going to be very much similar like this. Yeah, so this chart, chief yen chart. Some weaknesses came, alright, and this top is being held. Prices to go and drag to that low. This for a time frame to hold, 1 hour time frame. Alright, breakout to happen. This like this. Okay, the trend is building right now. Once the price aggressively break down, then continue to keep falling to the downside. If it doesn't, then all the way back to that top and then stop falling from that top. Okay, so same, expecting it to go much lower. Let me bring a chart. There you go. Okay, so this chart is telling us that the New Zealand dollar was more weaker against the yen and has almost, removed all those gains, testing these lows. Then the second one is the Australian dollar against the yen, then the pound yen, then the euro yen, then the chief yen, then the CAD yen. Okay, but we can clearly see over there that the dollar yen is still holding that top. Alright, still holding that top. So others, they are correcting right now. We can see over there on the 4-hour time they were correcting. Okay, and dollar yen is also correcting. So I will suggest you to keep eyes on the dollar yen as with compared to the others. Alright, dollar yen is still lagger and holding that top, and is at a good spot to watch it to crack from that top and drop much lower to the downside all the way to back these lows. Alright, so the analysis is very much simple for all these pairs. We are in a 4-hour correction. Alright, and if that 4-hour correction breaks and continue to keep dragging lower on one pair, alright, you're looking to others to follow up. But the pair right now you are watching is the dollar yen, which is having more potential as with compared to the others. If dollar yen falls, alright, it can go much lower. Alright, so it can drop from 157 to all the way up to, let's look at that. Alright, so if dollar yen drops, there is a dollar yen drop, these are the targets for the dollar yen. Okay, so we may see potential move up to this low, which is almost a $10 drop, okay, or $19 drop move can happen over there on the dollar yen. So more potential as with compared to the others we are having on the dollar yen. Alright, so this chart is showing. So we don't get that move all the way back to that 139. Alright, so at least we can see up to 149. Alright, so 149 in coming days. Okay, so the good thing is that on the dollar yen, that there is a central bank behind that. Central bank is right now saying that the early morning comment I have, we got a comment from the central bank. Okay, so we have seen time to time such kind of intervention from the Bank of Japan, from not Bank of Japan, from the Ministry of Finance. Pardon me, from Ministry of Finance. So back in September 6, 2023. All right, so we had comments. So again, this Japan warns of action over rapid currency movement, this date. Alright, and these were the dates: 7 May 2024, March Yeah, and we got those comments again last night. So let me find that. Okay, so what time it was? It was at night at 4. My time at night 4 it was. So means so I have to go exact there. Where are they? So during the Tokyo session, so we had those comments. Okay, so Bank of Japan must change policy without delay when the right timing comes. So to discuss potential rate hike next week. See that? So this is hawkish signs. So they are hard to say whether risk to inflation skewed to the upside or downside. So this is Bank of Japan's officials. But we are having from the Ministry of Finance as well. So, right, so this is basically a coordinated move from the Bank of Japan and Ministry of Finance. So both are hinting that they don't want dollar yen to go much higher from the current. There is the one which I was looking. So Japan's lead currency diplomat Kanda, I don't know, warns of potential. No, not this one, sorry. There you go, finally. So Japan's chief currency diplomat Kanda moves to counter speculative activities. Okay, when they say speculative activities, means that they don't want dollar yen to just continue to keep rising. Okay, means that they are watching the dollar yen. Okay, basically why dollar yen is very important, guys. So this dollar yen is not just a dollar yen or dollar or is a yen. Okay, this is not just a dollar yen. Okay, dollar yen is a very, very important currency. If dollar yen falls, okay, if dollar yen goes down, means that the whole global yields gonna drop. The whole global yields, US 10-year yield is gonna drop, 2-year yield is gonna drop, and even the Japanese 10-year yield is gonna drop. So means that investors gonna, start buying into the bonds. They are just giving signal that buy bonds. They are saying that buy bonds. Give us. They are actually saying that there are many things behind this simple comment from the Bank of Japan or Ministry of Finance. So many other assets gonna get impact from their comments, right? Or Ministry of Finance not just saying their own, right? They are actually having backing from other countries as well, like from the US, from the England, from the Bank of England and other central banks and other countries, other Ministry of Finance, because their yields is falling and they don't want their yields to fall. They want to borrow money, so they cannot afford borrowing at extreme borrowing cost. They are already facing higher debts, all right? And refinancing cost is very much high, so they cannot afford higher yields. So there is a lot of things just behind this is just not a comment. There are a lot of things behind this. So prices have fallen, yields gone higher. All right, those interventions started to come from the Ministry of Finance. So last time, they did, I guess last time the figure was $62 billion intervention from the Bank of Japan. They sold dollars with $62 billion. This is the one time. So they did a couple of times. Okay, these are the early signs that they are watching the dollar yen, right? And they're watching the global yields market as well. So Japan top currency officials Canada says it's desirable for the foreign exchange market to move in line with fundamentals. Okay, so means that 160 or 159, okay, is a price to watch, and we may see aggressive draw from these areas, these prices, and yeah, this is what I'm I was searching. So what you are looking for, you're watching, you keep an eye. So last time we had intervention at this area, that was something bigger. Okay, that was something bigger. All right, so price went up to 160.20, and then bang, they sold, intervene. We got an aggressive sell-off, corrected, bang, again the next breakout. So went into correction. So dropped from 162 to 152. Okay, so again intervention happened at this area. This was the intervention as well, from 162, and then that was a very big move, right? So from 162 to 139. So these are early signals. They are giving early signals that they are not happy with this price. They are not happy with this price on the dollar yen. Okay, so what's going to happen? Why, when the dollar yen will drop, okay, when dollar yen will drop, the sellers who are selling the bonds right now, they're gonna start pouring their money into the bonds, and yields gonna start falling, right? And that's what these central banks want at the moment: yields to fall, right? Yields to fall. They cannot simply afford. Governments cannot afford borrowings at such levels. Expensive. So they are having already higher borrowing costs. Here, when dollar yen gonna go down, okay, the dollar yen is correlated with the yields. When dollar yen gonna go down, here we're gonna see that this 10-year yield also gonna go down. Okay, so we are having some early signs that the yield is set to fall. Okay, if I'm gonna pull out, this is a daily chart, all right? 4R. Let's make it daily too. 4R gonna be okay, so you understand much better on the 4R. Okay, so we are having extension of this leg, all right? So this is dollar move or yield moves, this extension, all right? And similar move we had here, all right? So move started from let me check the exact date. Yes, this is the date. Move started from there to there, all right? There to there, there to there. Now Bank of Japan is stepping in, saying that they don't want this to break through. They want this to just get down, reverse from that. Okay, now where is the early signals or early signs that we may see drop from this? All right, the early signs that this is going to drop. Okay, when we look at the yen against the others, all right, yen is gaining against the other risk currencies. Yen is gaining against the risk currencies. Let's say if I'm going to pull out the pound chart, pound yen chart, pound is dropped more, yeah. JPY. So there we can see that. Okay, so pound yen started from where? Pound yen also started similar at the same time, at the same date, went higher. Okay, yields went higher. Then bang, pound yen dropped, yield dropped. Pound yen went higher, so we saw the yield went higher too. But this is early signal, early sign. This red line. Okay, you see that? This early sign. The drop on the pound against the yen. Yeah, you can see if I'm gonna go to the daily time frame. Okay, this is the early sign. There we can see that. This is the early sign that we are about to see tops over there, and we may see a drop over there back to this low where the pound yen is also testing. Right, so if I'm gonna look at the pound yen now, bang on, we can see that the yen gained against. Okay, the move started from here, from there. So, or we can say that the ABC move, right? So started from there, the ABC move, capped, did not broke through that top, right? So slightly broke through that top, slightly went through and started to struggle, right? And bang, we got a drop over here, and yen gained against the pound. Or we can say that the pound dropped, or whatever, whichever way you want to say that. But these charts are highly correlated, all right? When one goes, then the other goes too. So bang on, all right? So you are expecting bang on too here, yeah? So what we are having here, we are having, lead here, lead is there, and here we are having, support is just appearing over there from the central bank. The central bank is the Ministry of Finance, and also central bank is saying that they're going to consider the interest rate next week, yeah? So they are saying that price to go this way, and if you're going to keep going into that way, you are going against all these things. You're going against this sign, the signal of which we are having over there, and you're going to go against the bank. The bank is saying that price is not to just push more higher and go down. Okay, so this is much better pair as compared to the others. Okay, so slight push up, yeah, just you shouldn't ignore that the little push up. Okay, the previous top was there, 160, 30, right, and 162. Keep in mind that spike up is possible during the intervention, like we have seen there. The spike up happened, intervention happened over there, spike up came, stopped out, and then bang, price dropped. So spike up is possible when intervention happens. So make sure you understand that, and your stop loss should be according to that. All right, then you can stop out, and then you can re-enter again. So you're simply paying attention at that price, guys. So on the dollar yen. Okay, so once you're gonna see that the dollar yen is falling, okay, then dollar gonna fall across the board. And dollar gonna fall, yield's gonna fall. So pay attention at that top, at this area, and highly likely that this is gonna test that top again. All right, and if it doesn't test, all right, then a sharp breakout. I don't think so we're gonna have a sharp breakout, but when there is a CPI news, all right, so keep eyes on this chart during the CPI news. If CPI is surprising to the downside, we may see a quick drop over there on the dollar yen. Like if yield goes down, you're going to see that drop too. All right. So these charts, okay, correction as shown on the 1 hour time frame to breakout 1 hour time frame. Pound yen already dropped lower as shown. So I mean, you're looking for this to drop too. Dollar yen and CAD yen very much similar. If dollar yen goes down, then dollar yen CAD yen to go down too. Okay, so I'm gonna hold that top, right? So this top, yeah, ignore these charts, they are already down. You won't get, if you still want to trade, okay, these are the ranges. Same goes with the Kiwi yen, okay, so these ranges, so price to stay within these ranges. And Euro CAD too, it's already dropping, wouldn't suggest it to do anything, just keep falling. CAD shift wouldn't suggest it to do anything. Yeah, so keep eye, if you trade on this chart, keep eyes on that chart, as it is also at a place where the People Bank of China, they don't want this to break up, so we may see a big drop over there on this chart all the way back to that low. So it is at a reversal place if you trade on this chart. And oil can slightly push up, the way it is pushing up. Alright, so not much on the oil. We don't have a sign that the oil is going to fall from the current price, so I'm going to ignore the oil as well. Alright, so yields, okay, I said that yields to fall, yields 2 years to fall, 10 years specifically to fall from that top, and there is a buy opportunity. Okay, so it went slightly more lower. Okay, so this is the previous low, the 5% top. Okay, so still a buy. So if you have already bought this chart and and looking to hold it, right? And okay, so yeah, it's a time to build positions over there on this chart. Okay, yeah, looking for this to, you're looking it to just, I mean, this is in a buy territory, yeah, so can't comment much on it. You're just simply looking for a buy opportunity on this. This is a T-bond features, yeah, you may have access to that. Check with your broker, right, and look for this to hold and a buy opportunity for longer term, right, at least up to this, and for longer term much higher, okay, where the inflation is right now. Okay, so on the Bitcoin, okay, on the Bitcoin, as said last week, the analysis is very much similar. Okay, we are in a correction, it went lower and held that, bounced back, so you're trading in these ranges, simply the ranges which is just holding. Okay, these are the ranges. Alright, so it's very much similar, like a flag is appearing over there for the downside, for the upside. Okay, and the correction can get deeper. Yeah, the wedge is like a wedge is just appearing over there for the deeper correction. So that's a Bitcoin, and yeah, very much similar like this correction. Yeah, a bigger wedge, we can say that. So yeah, we are in a correction, so you're watching the lows every time and it is forming the new lows. If you're trading on that, alright, then you're watching these previous lows, price to hold and bounce back. Ethereum also went lower. Okay, very much similar like the Bitcoin wedge. Alright, so equities, I'm going to ignore the Nikkei. Nikkei is also a buy for short term within these ranges. Okay, I'm going to look at the US equities, because the US equities last week we were expecting a buy opportunity. Yeah, so we got some push up and then again suddenly news dropped it. Right, so we got a move, we did not exact saw that target and then again bang lower. So buying. All right, so still bullish on the Dow. Right, so still bullish on the Dow. If I'm going to pull out the moving averages, these are daily moving averages. Correction, wedge kind of correction is just appearing over there. We call that the channel, the reversal channel. Right, so the move you are looking for this and possible continuation. So more likely you're going to see, strong buying on the indices right after the Trump inauguration. All right, so once Trump going to be in the office, we're going to see that sharp buying, because the tariff risk is causing this drop. The tariff risk is causing that drop at the moment. So this is what you are looking again, the buying every time new low is coming on the US 30 during the New York session. You're looking for a buy, this move to happen. Okay, so I'm going to look at the lower time frame. I'm going to draw a couple of more arrows over there so that you can see that which formation we are having, right, like this. So this is telling us that the drop is slowing down. Let me Okay, so this, yes, this is what you are expecting. And every time when you see that the new low is coming out over there, you're looking for a buy within these areas. Okay, so I'm looking for a buy within these areas. So this is the telegram, and if you remember when we had a buy opportunity last time on the Nasdaq 100 index, I hope I'm going to find that quickly. The Nasdaq buy was a perfect at that time. It was a big drop on the Nasdaq. So Nasdaq is also falling. It's correcting. It's a good sign. Buy dip in coming days. These are the charts. Okay, there we can see. Okay, this Nasdaq was more weaker, so we were expecting the next leg from here. Okay, but this chart is little late chart, little late, and yeah, this chart is basically telling us that we got a 6% drop on the Nasdaq, 6% drawdown, and that drawdown removed. Okay, and this was the chart. This was the buy opportunity. Yeah, so this was the buy opportunity on the Nasdaq, and we got a hold of that low. Price went higher. Nicely, we got a next leg over. This is the 2-day chart. It means that the price went higher from this 17,300 to much higher. Okay, 23,000, I guess. Let me check. The high was at 20. The high came here. Okay, so this is the move. The move came from there. This is to there. The move came up to 22, close to 250. This was a very big move. So how much in terms of percentage? How much percentage rise came? 28% rise since then. 28% rise. Okay, but why I'm showing these charts? I'm showing these charts so that you can understand that what to do now. Okay, we are having a dip again. What to do now? Okay, same chart, and yeah, the price went higher. Yeah, nicely. So if I'm gonna look at the Dow chart again, okay, we are having again a dip, and the last time was here, I think here, yeah. The Dow chart was there, yeah, this chart, I guess, these areas, yeah, this was the, or this, I have to check that date here on the NAS, when we're expecting NAS to find this September, August or September, yes, there, this was the dip. This was the dip when we were expecting Dow to continue its trend. Okay, we had a tremendous strength on the Dow. How much in terms of percentage? 17%, right? 6,000, more than 6,600 points we saw a rise on that. So at least up to even still a 4,000, I mean 3,500 points move we can see over there on the Dow, or 10% rise, 8 or 10% rise. And if we see a new high, all-time high, I'm expecting it to go all the way up to 50,000 in longer run, all right, which is a 20% rise in maybe in this 2025 we can see further upside. So this is a potential. Okay, this chart is telling us that how much potential we have seen when we saw dip last time, all right. Chart I have shown on the Nasdaq 100 index. We had chart on the Dow as well. All right, need to find those charts. So example, Nasdaq 100 index dip played out really well, and Dow as well. So we are having same setup again. Okay, how to deal with this dip? Okay, is on a lower time frame. Okay, what we were spoken about the bonds. All right, so why, I mean, what should happen? What yield went higher? Okay, yield went up to, I mean, heading towards 5%. So it's a longer term yield. So longer term rates are rising for longer terms. This is a risk for the indices. Okay, so rising yield is a risk for equities. So equities should crash to the downside. All right, equities are now falling as the strength we have seen on the yield. Okay, so yield went from 360 to 480. All right, so 480. So it's a huge rise. So this is actually telling us that rates higher for longer. So when Fed gonna hold rates higher for longer, means that this is not good for the equities. All right, borrowing cost is higher. All right, means, I mean, you're not gonna have cheap debt available for the businesses. All right, so that's right now, that's causing the indices to go into a correction. Okay, this correction, but we are not having a big drop. All right, big drop like we had. Let's look at this previous one when we hit that 5%. Look at this. All right, so when we hit this, when we had that, all right, so when this rise came, these rise came, so we had a, this is the correction. Okay, this was the correction area. So we had a 23% drop, right? 23% drop, and then rise came over there when yield was at 440 or close to 5%. So what this is telling actually, so this is telling us that the inflation has fallen. I mean, we are not having a drop like this. We are having a little drop over there. So this is telling us that the rate, this is simply a buy opportunity in the bond, and yield is going to go down. Why? Because inflation is already close to 2%. Little jump came over there on inflation after after the rate cutting from the Fed. So so little jump came over there. Is it going to sustain for upside? No. Why? Because other countries facing disinflation, China, they are facing disinflation, and the US is lagging. So inflation going to start falling. All right, rates going to start going down. All right, so we're going to see push up. So the reason why it's not falling so aggressively, because investors still see that this is a buy opportunity and needs to hold that rather than start taking out their positions. Okay, that's why every time when we see that dip, the dip is being bought. Okay, dip being bought. All right, so all these dips are being bought. These dips being bought. So it's again decent dip. How to do? As I said that on a lower time frame. Okay, we got a almost 8% drop, as I said that earlier. So go to your lower time frame. When market open during the New Year session, if you trade, all right, so you're looking for these previous lows to hold. All right, price broke out, went lower, and then again regain that new lows. Okay, so this is what you are looking for to happen. Okay, so there is a risk today that we may see another leg lower back to this. All right, there is a risk for this move to happen. All right, we cannot rule out that we may see drop during the year session. This move can happen, but if that happens, okay, then you are again looking for a longer term buy opportunity back to this, or as I said, that much potential buy. Set your target. Why we may see another leg lower? Okay, we already got drop on the Nikkei went lower during the New York, during the Tokyo session. We got a drop. Okay, so we got a strength. Again, we got a strength, bounce back again yesterday. We got a strong buying over there after this drop, and then again last night during the Tokyo session we got a sell-off over there. All right, so that means we still can see one more drop very much similar like this, which can test that low during the New York session. Okay, so any dip like this back to that low, you're looking for a buy opportunities on the Dow for longer term. Hope that makes sense and you got my point, what to do, how to look for. All right, and this wedge, which is just building a channel. Okay, so this wedge is a sign for the breakout for upside. Okay, There we can see that in past. All right, so there you can see that. So every time a new lows is coming, you are paying attention that to break out. Yeah, there. So that's what you're looking on the Dow. Dow gonna be a buy for longer term every time, and we see that new low. So Nasdaq also, but Nasdaq is, you know, is not as ideal as the Dow. Okay, if Dow start rising, we're gonna see that the Nasdaq will also push up. Okay, so same, like still another leg lower can happen. Okay, so you're looking for similar like the Dow. So I spent so much time on the Dow. Hopefully you understand what to do here on the Nasdaq and the S&P 500. Okay, very much similar like the Dow. Okay, new low is here, the ranges are there, kind of wedges forming over there, new low to come like Nikkei, and then bounce back. So this is also similar like the Dow. Okay, very much similar like Dow, daily time frame, and the new low. So you're looking at to go back up, back to that tall wedge kind of formation is happening over there. Not exactly as the Dow, right? But this is what we can see. So yeah, to break up. Yeah, so that's it. Enough for today, I guess. All right. So I haven't. Some of you guys are. Yeah, it seems to me that my mic. Yeah, I'm not sure. So I have to adjust my mic. I can see that the mic is not exactly doing as it's supposed to do. Yeah, so maybe my filters are causing that. I have applied some filters on that on mic. Okay, so we'll adjust that in the next time. Voice to be much better for the next time. All right. So on some coins, coins, I have talked about that last week as well. So very much similar pattern you're going to see on these coins. The pattern is just simply developing over there on Bitcoin. Okay, so Bitcoin pattern is very much similar on some of, they are, if Bitcoin goes down, you're going to see more drop on these altcoins. All right, so a deeper sharp sell-off can happen over there. All right, so we are running out of time. Right, and hopefully you understand that we don't have much opportunities this week. All right, we are still in a trend. In a trend. Okay, what is the trend? The dollar is strong. All right, so yeah, I have already shown the gold. Gold is a bullish. Gold will remain bullish. We can see that the gold haven't fallen much, even higher yields. Okay, yields gone higher, but gold did not drop a lot. All right. So what we are expecting from the yields, right? We're expecting yields to go down, right? If yield goes down, all right, if yield 10-year yield is at 4.80, if that goes down, automatically you're going to see that dollar will drop and gold going to keep climbing higher. So you can see there, all right? What you can see here. Okay, we got to move on the yield. There, right? So the move start. We're gonna look at this from. Not much behind, right? So yeah, let's talk about this. So yield started rising from here. Okay, when yield goes higher, means dollar is rising. Okay, so gold's supposed to go down, right? Because dollar gaining, but that's not happening. So gold still sniffing something else, right? Still rising against the dollar. Right, even after such move, okay, this move and going higher. So what we are expecting on the yield is close to 5%. Okay, we're expecting yield to reverse. Talked about Ministry of Finance in Japan, right? They are not happy with the dollar yen rising. Okay, if that goes down, means dollar needs to drop. So this is not a case for drop. Okay, gold is not a case for drop. Gold is a case for just keep climbing higher slowly. So the reason why we are not having so much aggressive rise on gold, okay, there, why not aggressively rising like this? Okay, the reason is the yield. Okay, longer term yields are pushing higher, causing slow rise on the gold. Okay, so sign that we may see, continuation of that trend. So So as shown that on lower time frame, you are looking for this trend to stay intact and continue to keep rising. Okay, so thank you very much, and we'll see you back again in another weekly market outlook. Thank you very much. Have a good day. Enjoy your week. Thank you. Bye.